starting. All attendees are in listen-only mode.
Hi there, good day everyone. I'm just giving it a bit of a sound check just to make sure that everybody can hear me and see my screen as well. Welcome to FB's webinar certification course series. This will be part two. I'll take you through slide by slide and just after I've checked all the sound. Just give me a second, we'll just check on that and we shall then begin immediately. Just give me a second, we're just checking the sound and also my screen. And I think we can start. Okay. Now, I would like to welcome everybody. Firstly and foremost, I would like to say a big thank you for spending your time with me this evening for this second part out of four parts for the Mastering the Psychology of Management series of webinars. And the title of this particular series is The Mindset of a Pro Trader. We have gone through part one, more on the brain, a bit of theory there about neuroscience, neurofinance, and a couple of other very interesting topics. So in part two, I would like to cover a couple of more practical approach to the market, especially in volatile times. But just before we begin, if you guys don't mind, I would just read a couple of lines of the FP Markets disclaimer here, and we'll just start. The information contained in this material is intended for general advice only. It does not take into account your investment objectives, financial situation, or particular needs. FP Markets has made every effort to ensure the accuracy of the information as at the date of publication. And I'll just read the last few lines at the very bottom here. FP Markets recommends that you seek independent advice. First Prudential Markets, that's what FP Markets stands for, First Prudential Markets Private Limited, trading as FP Markets with the registration and license number, as you can see. So let us just begin. So we will go through a couple of things on the how from theory to practice first, because I think we've covered the trade plan, and one of the major part of managing your risk is being focused on your trade plan, and your trade plan has to take you step by step in sequence that most probably, if your trade plan consists of various activities that would sort of make both hemisphere of your brain more active, taking into account various activities to basically go onto the, sorry about that, the sound system's a little bit, okay, there you go, sorry about that. So it's my microphone just fell off my desk a little bit, so there you go. So with that, the price trade plan, the price trade plan is a trade plan that I've devised and created here in my effort to balance out activities of both right and left hemispheres, okay, of the brain. So this is what would encourage more I would say creation of discipline, to encourage you to be more disciplined and patient. So that's the whole aim of a trade plan at my end, is to do that. To help traders do that. So we've got a price trade plan here. It starts off with the first step. You've got the psychology of the market that comes into account with topics relating to trends, sentiments, understanding whether it's a risk on market, and various other factors. And then we go on to a little bit of calculation with simple formulas. On the second part, the letter R of the price trade plan basically consists of risk and reward sort of formula, making you, I would say, helping you to choose the right lot sizing, understand margin, understand a couple of other a bit more mathematical side of things, but it's more a risk averse type approach. And then we've got the insights. Basically, it's a market insights that comes from the group, comes from myself through my mentorship program, as well as my guidance to traders as a mentor. So we want to encourage traders to also socialize with fellow traders, fellow like-minded traders as well through the Telegram GTI group and various other channels. Okay, so that's one part of it. And then we want to also confirm from the letter P, R, and I to get a sort of convergence to understand that we have confirmed, sort of checklist all the factors to understand before we make that financial trading decision to execute the trade. Okay, so that's basically it. Now, what I would like to take you through is straight away into some practical situation that would mirror a bit of adversity as well as challenges in the market as of now. Now, we're in the month of June, and just a couple of days ago, as well as more events are expected to create volatility in the market. So from research that we've done here at the Geometric Trading Institute in collaboration with FP Markets, we see that there are four main themes of in the market that would drive volatility, a bit of unpredictability of trends and markets and sentiment. So it's a little bit like economic weather. More like the weather, but it's economic weather and political weather at the moment seem to be looking at some storm coming through with looking gloomy at this stage, and perhaps we need to understand how do we actually risk manage in a situation like this. So before we go further, probably best for me to present to you the four risk themes that we're looking at for the month of July, and it's not certain that it'll just stay for the month of July. It might actually be a dominoes effect globally as well. So let's just look at it, and perhaps if you've got any questions, feel free to just ask. We've got the first theme, the catalyst, potential catalyst of moving the markets on a large scale would be trade wars, of course, and trade wars and protectionism. So I'm just going to read out a little bit here and just give you these themes, because what we are going to be doing after I've presented the four theme is just to straight away bring you to the charts and present to you some opportunities that could actually mirror or coincide with what's going on at this moment of time in terms of trend, in terms of opportunities, in terms of a risk through volatility as well. So I just would like to show you price movements and a couple of trade ideas through it. Okay, so let's start off with number one is trade wars, as I've mentioned, protectionism. It's got a lot to do with President Donald Trump, of course. Now, he continues to insist that a trade deficit is a loss, and that while exports are good, imports are bad, and trade deficits are bad. So he's got that already set in stone in his mind, especially, and he's gearing forward in making that happen. So there's a lot of battle with China as well. As I speak now, we've got lots of fall in prices of China's stock, and China's situation economically and politically at this moment of time is sort of pulling in, I would say, spreading the effect onto Australia as well, mainly because of being their major trade partner. So as you can see, we have got some expectations of more price fall for the AUD or the Australian dollar. So I would like to bring about all these presentation of these charts for these pairs that are connected to the four themes as well, and we can then look into trade ideas as well as risk that prevails. Okay, so and apart from that, at present there are friction, as I've mentioned, between the United States and its trading partners such as China, European Union, of course, with the steel tariffs and various other things that President Trump had just thrown into the market just recently, Canada as well as Mexico, and they're all intensifying as I speak. Now, the Trump administration is steadily moving its protectionist agenda forward as well. So he's got a couple of things brewing up, and these are factors that would prove to be catalyst in more action in the market, whether to the upside or downside. So this does actually spell some big opportunities coming forward with some of these themes that I'm talking about. So that's the number one theme, trade wars and protectionism. Let's move on to the second one, which is political climate in Europe. Now, there's a lot of storm going on in Europe, in Germany, Italy just recently with its elections. We have got brewing situation with the PIIGS countries, involving Greece, of course, Portugal, but Greece mainly. Probably there are talks about ways to handle situations there. We have got various other issues, immigrational, migrational as well, with Germany and various other European countries. So let's take a look at this. The tumultuous European Union summit on June 20th, that was last month, June 20th, over the issue of how to address the question of migrants. And this is basically what I've just mentioned about. So Europe has sent ripples across the continent, with some saying Merkel had broken the EU. So this is what's gone on to Bloomberg as well, Sputnik News, various other media, and it has been causing that ripple effect. And this is what could potentially be rippling the markets as well. So it is appearing more apparent that the EU has to prioritize in harmonizing its own initiatives and capability plans with those of NATO. So there's a lot of political sort of inclination, economic as well, and various other behind the curtains type scenes that may actually come up to surprise the market's impact. Okay, the markets, the movement of prices as well, and various others. So this could help avoid the duplication, especially the NATO defense planning process. Okay, DPP. Now this could help avoid the duplication and the potential undermining of NATO's defense and security role. So that's just some questions about the role of NATO as well in different areas, especially defense and security. Now it is a difficult balance act, and one that the EU has overcome, and potentially a delay in finding solutions could cause upheavals both politically and economically. So that's basically it. So you've got political climate in Europe. So with the European, with what's going on with Brexit as well. So it might actually give us some opportunity, or probably best to monitor the euro versus the GBP as well, which is a pair that we can actually look into. And I would like to demonstrate that onto the charts as well shortly. Okay. So on the third point, we've got relative ECB Fed, Federal Reserve policy outlook. Now, let's take a look at this one. The ECB announced last month that it will end net bond purchases this year, but also that interest rates will stay unchanged. So you see that mention of interest rate remaining unchanged is also going to stretch the market sideways potentially. We don't know that until we look at the charts. We don't know that until we monitor the markets as of now and look into potential short, medium, and long-term type opportunities. Okay, so stay unchanged until at least through the summer of 2019. So this has actually gone out in the mainstream media as well, talking about unchanged interest rates by the ECB. Now, the wording was generally interpreted as leaving open the possibility of increasing borrowing costs at the September meeting. So now we know we've got something to look forward to in September. So let's look at how the market would actually marinate prices, on various cross pairs, major pairs as well, in time to come. Now, there are many monetary policy rules that will recommend a level of rates for different economic conditions. The Fed doesn't strictly follow any of them. Now, this has actually been proven year after year over many years. Okay, but here it says the Fed doesn't strictly follow any of them, but consults several. Now, the first difference rule is distinct for not relying on any of the unobserved variables that vex Powell, making it, as Williams and Athanasios Ofanidis wrote, immune to likely perceptions in these concepts. So these are all excerpts from Bloomberg that I've just got recently, as of yesterday. And we're just looking at some heated sort of debate about interest rate rising or not, bond buying and various others. So there's some sort of confusion. And I would like to also pinpoint a sideways type market, momentum up type market, and what would actually drive momentum up, momentum down, or sideways, and sort of sentiments and emotions that we can spot onto the charts itself when these events are happening. Okay, we'll move on to the last theme right there, which is relative EZ Eurozone US growth outlook. Now, the European Central Bank's chief economist highlighted growing signs of strength in the Eurozone economy on June 14. Now, it hinted a possible taper. What does that mean? Just print money. Okay, that's all it means. So the more money printed, more cash flows, more potential of a rise, of course, in the rates, in the interest rates, in the currency rates too. So it hinted a possible taper on its bond purchase program from 30 billion euros, which is 35 billion or so US dollars a month, down to 15 billion a month in September. So the decision by the US to raise, now that's on the central bank, the ECB, the Eurozone side of it. With the US side of it, the decision by the US to raise tariffs on imports of steel and aluminium could help protect US jobs in this particular area, but it will also raise costs in the areas of the US economy, such as in metals, like auto, construction, manufacturing. Ultimately, this could mean higher prices and higher inflation, which in turn will hit the US consumer, which at the moment, despite the tight labor market, is only seeing modest wage growth. So you see there's some impact going on there as well. Okay, so that's basically it, and we're looking into all these factors here. I think we've got some latecomers who've just entered. How are you doing, Kabir? Welcome to today's second part of the certification course by FP Markets. Not to worry, I'll have this recorded as well, so I'll have that sent to you. I wonder whether you've attended the first part. We will have the availability of all recordings, all 4 recordings, so that you can actually go on to the certification course, meaning to answer the quiz questions and get a certificate at the end. Okay, all right. Let's just move on a little bit. I would like to. If you would like me to revise a little bit on these 4 themes, I wouldn't mind to do that as well. Let me just see whether I can go back in a second. Right. So we've gone over the 4 themes of July 2018. That basically means some catalyst or factors that may move the market, and it's wise for us to be aware of them. Mainly because they cause some level of risk, volatility as well. So we as retail traders need to be really careful and wary of these risk factors. But they do also pose, behind the risks, they also pose opportunities for us in times of volatility. So the first one, we talked about trade wars and protectionism. Okay, that concerns President Trump's, plans on tariffs and various others. Okay, wars are definitely going on as we speak. Trade side of it, trade wars. And we've got the political climate in Europe concerning NATO, concerning the, migrant situation as well, and various others, political climate in Italy, some, blooming events in Greece as well, and various others. So we've got something to look for there in Europe. Also, with regards to ECB and the Federal Reserve's policy outlook, it's at this moment a bit of confusion with regards to interest rate hikes, and we're just needing to monitor the market at that moment with this. And we've also got the European zone versus the US growth outlook as well, and we're looking at more tapering going on, and also some confusion with regards to very modest wage growth that might be expected from how US is raising all its tariffs and various others. So we want to go onto the chart, and I would like to present you the charts to give you an idea about how trade ideas, how the risk events could actually also pose opportunities for you in time of volatility. We're expecting more and more volatility as well. So I just want to take you through to the charts. In part 3 and part 4, we'll probably be even more practical onto the charts. This is FP Markets MT4 account right here. I have got gold right in front of me. I would like to also share the geometric patterns outlook, the basics of geometric patterns as well in our next webinars. So in part 3 and part 4, we'll dig deep into analyzing the market, balancing between fundamentals as well as technicals. Okay, so before the gold side of it, it's probably best for us to go on to Euro USD right here. I mean, there's some very bizarre looking shapes. I know that you would notice that right here. I mean, we at the Geometric Trading Institute, we research shapes in predicting markets as well. So here, for example, we're expecting a little bit of a rise of price from the 1712 area, basically above the 1720 area, giving us a good buying price only at the 1730 area, and then we're aiming at 1810 as our exit. So we've got close to about 100 pips, I would say about 90 pips or so, perhaps a little bit under 90 pips. It depends on how you would like to enter using price psychology perhaps. So we will take you through that as well in our next webinar to talk about price psychology and psychological numbers. Okay, so here itself, we are looking into the possibility of an upward type momentum for Euro USD on the 4-hour chart, as I've mentioned. So we have got that area right there that we are looking at a bit of a buy opportunity. If it does actually persist in terms of its strong uptrend, let's say for the Euro USD, and only if it goes beyond this area here and above the 1850s psychological level and up, then it has the ability to actually reach the 1.20 0.00 area. But I would be looking at exiting before it touches the 1.200 psychological level. Okay, so that's just a bit of an idea, because we're matching up with the themes as well that I've mentioned, and we're looking at some buying opportunity for the Euro USD. With regards to gold, we've also got, due to the risk of environment whereby majority of investors are switching off their appetite for risk and probably gearing towards least risky assets. So hence the reason you'll be looking at more interest in buying gold, JPY, as well as the CHF, which is the Swiss franc, and together with that, it would also be rising. There are possibilities to look into correlation, positive correlation between gold and euro as well. So majority of investors are looking at all these 4 themes to actually encourage some interest in buying gold as well as the euro. Okay, so there you go. Euro has been made a funding currency as well, so hence the reason we're looking into the flow of euro coming in much more as a funding currency. Together with that, we've got investors preferring least risky assets like gold, silver, as well as we've got commodity currencies like Australian dollar as well as New Zealand dollar, but preferably the Japanese yen and the CHF, which is the Swiss franc. Okay, so here, for example, we're looking into a potential rise of price, and probably the first stage is to have a buy and have gold's prices reaching this area here, but to exit before it reaches the 1266 area, and perhaps the second stage buying only after it has gone above the 1270s areas, 1275 area, and then we will be able to aim it as high as the 1300 area for the price of gold. Okay, so it's not just yet, because we're looking into the daily chart at this moment of time, so it might take some time to marinate that through. But as you can see, this is a Z-like pattern. Here we call it the 5-0 pattern or the lazy Z pattern. This is a bearish type Z pattern, which actually means that once it actually reaches that area right there, then it has a potential for a reversal. Now, if you look left, it's got all these potential support right here. We've got resistance here, became support. That support there potentially could be resistant as well. Okay, so that's for the gold side of things. Due to lots of situation regarding Brexit that's expected as well, one good pair that we could look into with regards to what's going on in Europe, the Eurozone, as well as Brexit, is the Euro GBP. So here, for example, just to go over a couple of things with regards to trend, if we look into a cluster of 3, it's probably best a cluster of 3 time frames. So most traders, I see that they are more comfortable in just looking at the trend with 1 time frame. The problem problem with that is you may miss out really crucial data if you are relying only on one time frame. So a cluster of 3 minimum, let's say 1 hour, 4 hour, and daily. It does actually depend on your equity level as well. If you're looking into drawing patterns or a setup on a 4-hour chart, you would need to ask yourself whether you've got sufficient equity for that. I mean, lower time frames would then match lower equity level, medium equity, and higher time frames, higher equity level. Okay, so that's basically it. Let me see whether I've got any questions at all. Let's just look at that. Now, do I have any questions at all? If you guys have got anything in mind or you want to check out with the markets and various others, be happy to help. Okay, so there you go. So we've got some ideas here about more bias to the upside for the Euro GBP, mainly because if you look into the way the candles are moving with push up in prices, has actually appreciated above that these 3 lines, and these 3 lines are the 50, 100, and 200 exponential moving averages. And how do we look into a buy, not a buy, but looking into a bias to the upside or downside? So by looking at the position of the candles. If majority of the candles are above all 3 lines, then you're looking into bias to the upside. But it's best to compare 1 hour, 4 hour, and daily, not to compare but to match them all up. Now that actually means that if you look into candles above all 3 lines in all 3 time frames, then you've got a better I would say a stronger argument into the bias to the upside or bullishness. Okay, so let's just match that with the 4-hour chart. Let's look into what's going on. If you look at that and the way the 3 lines are moving as well, it's just giving that push to the Euro GBP to the upside. You see that candles are above all 3 lines as well. Let's just one more time compare that with the daily chart. You can see that in the daily chart, the 3 lines simply go sideways, and that actually gives me an idea that it's probably having that momentum to the upside between 1 hour and 4-hour chart, but then on the longer term, the stamina for it to go up may actually lower or weaken a little bit. Okay, so that's basically it. So it gives me a lot of information there. I'm looking at price at the moment, trading at 0.8338. If prices were to appreciate further up, it may actually bump into a psychological level, and that psychological level is the 8850 area. So let's just mark the 8850 psychological level. Okay, so mark that one there. All right, now here, for example, if we go on the 4-hour chart and look into minimizing that, zooming out, you can see that that yellow line itself has got various points that prices in the past have actually respected the price there as well. So here you go. And that's basically it. Now, the other thing as well is if I'm expecting a potential rise of price to the upside, there is a potential ABCD pattern to the upside as well. So I'll just demonstrate that and draw that. We'll cover that more in both part 3 and part 4 to be more practical in generating more trade ideas for you. But here I would like to start with the basic. We've got A to B right here. Okay, and if you take that, double click that, move that, AB's length equals CD, just like that. Yeah, pull that down. That's basically an idea of how far potentially Euro GBP could actually be reaching right there. So that's the forecast of how high, if at all, the bullishness actually persists. Okay, so here, for example, if I were to get that, there are ways and there are rules as well with this approach, whereby I could easily pull that from that low, but why did I pull it from that low? That's basically, that's mainly due to Fibonacci. If I pull the Fibonacci right there, I can see that it's touches that 50%. I want the that C point there, or this support area, to actually touch either one of these Fibonacci level that I've chosen. But if I put it right there, it's a bit more accurate to the 50%. So what I'll do is I'll adjust that length now here to actually stretch out a little bit further, I would think. And let's get rid of that first. Okay, so the A to B has been stretched out a little bit, adjusted. Okay, to there. So get rid of the Fibonacci as well, and If I get that, now your projected D point or price rise for the Euro GBP is as high as the 89.70s area, but we are only at 88.40, so there's definitely some room to catch up prices to the upside. But where do we actually enter? I mean, for entry prices with chart patterns, it's best to convert that chart pattern into a geometric pattern. All you do is draw a line from A right to the D, and when you find that crossed area right there, that's your ideal entry area, which is really close to the price now. Now, it's 88.43, that's what's suggested based on that crossed area as a buying area, but if we adjust that or tweak the current price to following principles of psychological numbers, I would prefer to actually enter only once it actually reaches the 88.60 area. So you could easily do that and do a pending order and buy the Euro GBP at 88.60 instead. You can easily put a pending order on that at buying 88.60. Now, because it is at the 50%, the projected D point, don't worry if it's all confusing at this moment of time, because we have tutorials on that as well, step-by-step videos in the fxgeometry.com. So here, for example, we would project it to the 200%. There are reasons to believe that. Okay, so we have got two options of where price could go, but it's probably best to take profit below the 89.80 area by 10 pips. So 89.70 would be an ideal, I would say, take profit zone. So that's 89.70. I'll just get that done. 89.70. All right. So this is basically how I would be forecasting and trading the market using geometric patterns. So here, for example, we're looking into a potential entry point for the Euro GBP. You can easily set a pending order on this one at 0.8860, taking profit at 89.70. Now, where would the stop loss be? Now, the stop loss would be at 67% of the A to B. So we pull that A to B really simple, keep that really simple, and put the 67% as my stop loss level right there. Okay, so I've got a stop loss, take profit, as well as my potential entry zone. So here, for example, let's look into the potential profit area. Would be from there, 88.60 all the way up there, would be about 108 pips, also 100 pips, and the stop loss would be there, about 87 pips. Okay, so that's just nice, a little shy away from the 1-to-1 risk reward ratio, but it's ideal. So that's 67% of A to B. So this is how the ABCD bullish pattern looks like for the Euro GBP, giving you a bit of an idea of a potential buy type opportunity, buying at 88.60 and taking profit at 89.70 with a stop loss at 0.8774. Okay, so that's basically it for Euro GBP. We've talked a little bit about gold as well, but in our next chapter, our next part, which is part 3 of this course module, we'll be spending a lot more time onto the chart. Okay, onto the chart, and practicality does matter a lot more, and we'll look into trade ideas as well as marrying factors and elements between technical and fundamental, and going through the price trade plan. All right there, guys. Any questions at all? Would there be anything that I can help out with? Any questions at all? Hi there. For some latecomers have just actually entered the room, welcome. We've gone more than halfway through already with the course, but not to worry. We will have all the 4 parts of the certification course recorded because they can actually be watched, and you'll be then able to answer the quiz questions that will be released at the end of the 4th part. So this course is a 4-part series. We've got another 2 more to go. Today is the 2nd part. Okay. Any questions at all, guys? Any questions so far? Would there be any questions on trade ideas? Are you guys already trading at the moment, looking into any opportunities for gold? Any questions about gold? Any questions about some pairs like Euro GBP, Euro USD, perhaps even GBP USD and AUD USD? Because these are pairs that we see a lot of more patterns as well as opportunities that are coming up, including gold, including oil as well. we've got some factors that may actually be impacting oil's movements together with gold and silver too. Okay, any questions at all? There you go. I think I've struck some interest with questions about instruments. Good, DAX. Oh, brilliant. Yes, we would definitely be looking into the DAX as well. I use DAX as an indicator for the market. I'm not really entirely sure whether we've got it here. Let me just see. Let's look into that. We've got the UK 100 right here. It should actually have the DAX here. I thought I've seen that before. Give me a second. Oh, I've done something there. Give me a second. No, it's not really letting me do that. GR, yeah, brilliant. Okay, good. Let's do that there. Give me a second. GER, is it? Let me see. Yes, okay. Let's do that. Okay. So, Kavaya, you're very much into German stocks. With that, yeah. Let's just see whether the geometric works with this one here. Now, yeah, very interesting. We've got quite a number of things that I could see off the bat. Let me just go into lower time frames right there. Yeah, okay, good. Brilliant. Okay, what's your take at the moment, Kabaya, on the GR30 here? Are you looking into more on a bullish sentiment at this moment of time? I'll give you my thought on that as well. Yeah. Here, for example, would you have a particular, I would think, the higher time frames, yeah? To look into that. We've got a couple of movements. It's trading at 12. Yeah, you want to 465 area. So we're looking into the daily chart this moment of time. Got several play of patterns that I can actually see. Let me just go into the right time frame to see whether I've got a clear picture. Here we've got more bullish type momentum from the 30 minutes chart right there. I'll show you something. If we actually pull this low here all the way up there, maybe shorten it a little bit here, and we'll bring that forward. You can see that it's there. Perhaps stretch it out a little bit. Potential A to B right there. Just look at whether or not we have got any potential upward type movement. Now before that, it's also best to look into risk area as well. Always look to the left. If you're looking to the left itself, you can see that you've got some support area right there. Yeah, I just want to look at whether we've got any more significant support in the past. Okay, we've got some support area right there, as you can see, and you've got more support area right there. What you can do is mark the support zone right here with the lowest body as well as the lowest wick right there, and keep pulling it to the left, perhaps on a slightly higher time frame as well. Look into that. I just want to look into the play of support and resistance, price action itself. It's entering the prices of now in 30 minutes. It's entering the sort of uncertain type zone in terms of price right there. But let me just look into whether we've got any patterns right there. At this moment of time, we've got prices sandwiched in between these two lines right here. But if it does actually move higher, you might find that resistance at this area right here, because this, I think it happened some time ago. Oh no, not really. It's in February this year itself, and you've got that resistance area at 12. You see exactly on the dot of the 12,500 there. Sort of like a psychological level too. So that is an area that it might find resistant if it does actually move higher and break out from these two yellow lines that we actually see. So here itself, let's just see if we've got any patterns. Okay. At this moment of time, I think I'm awaiting if I were to trade that to look into the breakout of price out of these two lines. First is just being trapped at that moment of time here. So the 12 480 and above, I would think, to give it more rise to the upside. But as you can see, we've got three lines here, three exponential moving averages. They work quite well with majority of the markets, and it has actually found itself with the wick itself on the support area right on the 200 exponential moving average. So it's giving us a bit of a bias to the upside. But let's just wait till price actually marinates further and moves upwards and break out of these two lines right there. Okay, hope that is a little bit helpful. Okay, good. Similar targets. That's brilliant, Tabaya. That's nice. Good. Do you actually trade currencies at all? Do you have any currencies up your sleeves? I don't really see any. There's a potential Z-like pattern here, but it's not really that clear for me. Let's see whether we've got a pattern here. You see, if I pull this one up here, double click that, bring that down. No, that's not really a valid type pattern. At this stage is a little unclear. So no, I've got no patterns there, but purely price action, I would think it would need to break out those areas right there. Okay, I've got a bit of a support right there, but now it's just touching the flirting with the 200 exponential moving average right there. So if it's finding support on its wick or on its body, that actually means it might use it as a step to actually push further up a little bit. Now as it moves further up, you want to look to the left and look at significant falls of prices. Now this level here is probably one to watch out for, mainly because it has brought prices downwards. But not only that, if you look to the left of that, it has found support on there as well. So this is an area to look out for. So I would mark the support based on this area here on the lowest body right there. Okay, and also the lowest wick right there. So you've got a border right there too. So you want to look at the 12587 area as potential resistance as well. If at all price were to move upwards, then you know that you could trade in between that black zone right there. But watch out for that resistance area at these two lines that I've just drawn. Okay, all right, good. Hope that's clear. Okay, guys, I think that's all I have for you guys, and I hope you guys could join me as well for the third webinar next week, the third part, and we'll go into a lot more practicality, looking at trade ideas and opportunities as well, and be teaching you more on the geometric patterns on currencies. Okay, so we've got a couple of very, very interesting topic to talk about in terms of fundamentals, geopolitics as well, and we want to marry that with patterns that we could potentially see on longer time frames as well. Okay, so this is it. I would like to, before I go, I would like to have you monitor the USD JPY a little bit, mainly because this has been a very interesting pattern called the cup and handle pattern. If you can actually see this, it looks like a cup right here, and then you've got a handle. Now this pattern has been marinating for months and months, and we had a lot of fall of the US dollar and all that, but then a lot of appreciation of the US dollar against the JPY too. So what this actually means is, I mean, with this pattern, if you will look at the mouth of the cup right here, we'll just give it a bit of a rough guide that this is the mouth of the cup, this is the cup here, then you've got the handle. This kind of pattern usually signals more move to the upside, and usually really big moves, because if we take just the distance of the base to the mouth, just roughly, that's how much the double up of price could potentially be. But again, we are monitoring the prices. I want to look at how things are going, because we are looking into the weekly chart at this moment of time. So even here itself, we've got a couple of patterns that is signaling potential rise of the USD versus the JPY as well. But we're looking at the weekly chart. It's best to go on to smaller time frames and look into baby patterns and trade the baby patterns inside the bigger patterns on big time frames. Okay, I hope I've explained that well, but we'll dig deep into that next week and we'll go into the patterns much more with more trade ideas for you. Okay, guys, with that, I would like to thank you. Thank you for your time. Please do email support@fpmarkets.com to request the recordings of tonight as well as last week's webinar. Okay, all right. Once more, thank you very much, guys. Thank you for your time as well in joining me. And with that, I would like to say a big thank you, and we'll see you again next week. Okay, have a very good night. Bye bye. Take care.